Welcome back. We've seen the price of the crypto, Ethereum, hitting 12-week highs. That's after the US SEC decided to approve the listing of Ethereum spot ETFs on the big exchanges. Our guest is bullish on the cryptocurrency and invests in blockchain and Web3 technologies. And of course, Ethereum is very important for the blockchain industry. We're joined by Vance Spencer, co-founder of Framework Ventures. Thanks very much for coming on the show.
Thanks for having me. Good morning.
You think that big institutions weren't expecting this approval from the SEC, or at least now?
I mean, we were expecting it. Most pundits put the odds pretty low of this being approved, but Ethereum is the clear number two. It has a futures market in the US. It is the largest application ecosystem within crypto. It's deflationary. It's fee generating on the order of a few $1 billion a year. This is an asset that people want to own. And our view is that this was inevitable.
Is that after they said okay to the Bitcoin spot ETFs?
Of course, after the Bitcoin spot ETFs were approved, it was basically the same exact case for Ethereum, where you needed to correlate the futures market to the spot in order for it to be approved. So our odds were always 60, 70% or higher, and we view this as a vindication of that view.
Just remind us what is special about Ethereum, because it plays a role that Bitcoin doesn't, and it's crucial in blockchain. Can you remind us of that?
Sure. If Bitcoin is digital gold, then Ethereum is more akin to Apple. It is building the app store for finance on chain. And what that means tactically is we've started to, and the next 10 or 20 years of finance are going to be defined by the trend of tokenization. We take existing stocks, bonds, fixed income, commodities, any real world asset you can think of, and put them on chain. And that's what Ethereum is at the forefront of doing. And so if you think about Ethereum, every time you use ETH, the blockchain, you need to pay a little bit of gas. And those fees generate substantial amount of revenue for the network itself and the people who stake ETH. And those are the people who secure the blockchain itself. So this year, Ethereum will do between $2 and $3 billion of earnings that go directly to stakers. And that is all generated by this tokenization trend that we believe has legs and is going to define the next 10 or 20 years of finance.
But there isn't an owner of Ethereum or a head office as such. It's all just dispersed.
That's the best part. I mean, there is no management team. There is no operating expenses. There is no, the ups and downs of owning corporate equity. Ethereum is a decentralized network in the same vein as Bitcoin, where it's maintained by millions of people worldwide that are running nodes and staking Ethereum. And it's a very streamlined form of tech investing. All of the earnings that happen on chain either go towards burning the supply. You can think of that as a buyback, or being distributed directly to people who hold the asset itself. And that to us is a lot stronger of a promise than a tech company, and we're based in San Francisco, saying they're going to generate cash flow in the next 30 years and return it to you eventually. We'd much prefer to invest in something like ETH.
The old Silicon Valley, fake it till you make it ethos. Yeah. Could Ethereum ultimately supplant Bitcoin?
I mean, look, Ethereum is about the fourth the size of Bitcoin. And if you think about the ETF flows that will come in, there's much less Ethereum on exchanges. It's much smaller than Bitcoin. It has much more of a reflexive, dynamic ecosystem of application builders. And so, for $1 of flows into ETH versus Bitcoin, it's going to make a lot bigger of a difference for the ETH, price. And so we think that the market is severely underpricing the risk that ETH moves a lot more than Bitcoin on this ETF flow, these incoming ETF flows. But we think both have a long-term future, and we hold both within the fund to be digital assets that, frankly, are more popular with younger people, and they're more popular than overseas. And so if you're asking, who even wants to buy any of this stuff, the answer is there's 60 million Americans in the US. There's almost 1 billion people globally that hold crypto. In a lot of the countries we invest in overseas, there's more people with crypto wallets than there are equities, bank accounts, or any other traditional financial system. So this stuff is going to be far larger than people anticipate. And that's kind of the core view of our fund.
You have 61 companies in your VC portfolio. You must see a few chancers and possible con artists come into you with pitches. How do you decide what's the gold and what's the dross?
We manage about 1.8 billion. We run a hybrid venture and liquid strategy. And of course, within crypto, like in any industry, you're going to see con artists, you're going to see lots of shenanigans going on. But the answer to your question tactically is we just disqualify the first 50%. You can tell who those people are. And we try to get a feel for, are these entrepreneurs committed to the asset class? Does this business have a long-term prospect to generate earnings? And, frankly, it's just like any other form of tech investing. And crypto has that mark to market every day. And so when there's problems, you're going to see a car crash pretty quickly. But I'd much prefer that to the existing, private credit funds, the tech equity, the growth equity. That's going to take 10 or 20 years to resolve. But crypto has a way of wiping its own slate clean and moving on. SPF's already in jail, and he's been there for probably 6 months. These things move quickly.